Hi guys, I'm Tim. I'm from Trading Strategy Guides, and we're going to talk about triangles this morning. I love triangles. Thanks for tuning into this training. It's great to see that you are working toward becoming a better trader. Before we begin this trading, we recommend taking notes. Strategy is proven to work over and over again consistently, and we want to share that with you. The outline of today's session: introduction, take notes, strategy guide rules, tips and tricks, why we automated this strategy, and then we'll talk about a special bonus. I want you guys to know I'm not a salesman, I'm a trainer. So, don't forgive me if my sales pitch is lame. Okay, before we begin, I ask that you please try to get away from distractions and so on. We're going to get kind of in depth on triangles. I want you to be able to put your full training into the course and to be sure that you're paying attention. I have focus issues, so I understand these things. My goal today is to give you the most possible value by teaching you a great strategy that you can use immediately in your trading. If I accomplish my goal today and you feel like I deliver a great strategy and great value, with your permission, I'll share a special offer about a tool we created to make trading this strategy much easier. Okay, let's get into the training. Hope you're ready to learn. Okay, this is a triangle pattern. This is an example of a triangle pattern. Basically, buyers and sellers are at a draw with each other. A tug of war, or as I really like to call it, a knife fight. Because that's a little bit more what trading is like than a tug of war. As the two lines get closer and closer together in the triangle, it's quite evident that something will have to give. Whoever wins the battle will be the one you want to grab a ride with by entering a buy or a sell. From a risk management perspective, triangle patterns offer you good trade opportunities in terms of risk to reward ratio. Your protective stop loss will always be kept very tight, while the potential profit is often 3 or 4 times the amount of your risk. The only real challenge with triangle patterns is identifying the real breakout as opposed to the head fake, and having enough confidence to hold the trade until the minimum target has been reached. Okay, here's a few different triangles. There are lots of different triangles you can look at, but we're going to look specifically at what I believe are the best triangles to trade. The symmetrical triangle, I often call this a continuation triangle. The price will bunch up and converge together. I call it winding up. You'll see lower highs and higher lows, okay, like so. Now, these patterns don't happen in a vacuum, and you really need to see a trend into these patterns for them to be realistic. Okay, so don't just pick out what looks like a triangle in the middle of a consolidation. Sometimes they're predictable, but most of the time they're not. And what you're really looking for when you trade is a statistical advantage. Symmetrical triangle works best when used as a continuation pattern. You know, I say I don't use it unless it's a continuation pattern. So you need to see a trend into it. This means that before the symmetrical triangle pattern forms, we need to have a prior trend, bullish or bearish. If the symmetrical triangle pattern is used in the context of a trend, for bullish trends, we look for an upside breakout. For bearish trends, we look for a downside breakout. Now, I'll be straight with you. I didn't write this presentation. I would have even left this first sentence out completely. If symmetrical triangle is used in the context of a trend, I wouldn't even bother with one if it's not in the context of a trend. Now, there may be other traders who will tell you otherwise, and they're not wrong. I'm not one of those guys that says my way is the only way. There are 1,000 ways to be successful in trading. I'm just going to tell you what works for me, okay? You guys have to work out what works for you. That's the hardest part of learning to trade. Being a clone of me is not going to work for you, for 99% of the people out there. But I can show you what works for me, and then you can take that and build on it. The symmetrical triangle pattern can be drawn by simply connecting the swings with two sloping lines that need to converge at some point in the future, making the break inevitable. Now we have to keep in mind that the symmetrical triangle is a neutral chart formation and it can break in either direction. As with any consolidation, we never know what it's going to do. A consolidation will do whatever the market decides it's going to do, and nothing we can do can change that. You have to get your head right. The market is always right, okay? When we finally break from the symmetrical triangle pattern, the following move needs to be very violent and fast moving. Okay, here's an example of an ascending triangle that actually broke the wrong direction. An ascending triangle would have a resistance line on the top like this, which is pretty much horizontal, and then higher lows. We call it an ascending triangle because you can anticipate that it will break to the upside. This one, however, did not. But you see that the break is decisive, okay? A pattern like this, I would only trade long. I would only buy on a break of this pattern. This break, I would just stand aside on this. Again, I'm telling you how I would trade this. That doesn't make someone who would say something else wrong. The ascending triangle pattern is a bullish continuation pattern for high probability trades, but it can easily be used as sell setup as well if the downside breaks first. Again, I say, I typically will only trade the break of the upside on an ascending triangle. I'm a very conservative trader though. For high probability trades, we want to look for a break of resistance because the ascending accumulation of buy orders. So the top part of an ascending triangle is a resistance and the bottom part is an ascending trend line. Higher lows. The best way to enter any type of triangle is only when the price has broken and closed above the upside trend line in the case of a bullish breakout, and when the price has broken and closed below the downside trend line in the case of a bearish breakout. So a simple break of the triangle may or may not lead to a successful trade. However, if you are willing to wait for confirmation of the break, I think you'll be much better off. The descending triangle is just the reverse of the ascending triangle. Horizontal line on the bottom, the support line, and then lower highs. This again broke in the opposite direction, which is not typical in my opinion. Now, a lot of traders may trade this, and this strategy, our triangle strategy, will allow you to trade that if that works for you. In essence, the top part of the descending triangle pattern is a descending trend line, while the bottom part is a support level. And often you will find, if you look left on your chart, which is always a wise thing to do, you will find that the triangle is being supported by a strong support level. The descending triangle pattern is a bearish continuation pattern for high probability trades, but it can easily be used as a buy setup as well if the upside breaks first. For high probability trades, we want to look for a break of support level because the descending triangle resembles accumulation of sell orders. The textbook profit target for any type of triangles is the height of the triangle projected in the direction of the breakout from the breakout point. That's a little bit hard to understand, but if you measure the widest opening of your triangle when you draw it, and then project that number of pips in the direction of the breakout from the breakout point, that's your target, typically. Keep in mind that the strategy can be traded on any time frame in any market, and no indicators are required, just lines that you draw on price action. I like price action trades. Okay, so this is the strategy. First, find a forming triangle, an ascending, a descending, or a symmetrical triangle. And I don't, like I say, I typically call this a continuation triangle because that's what it is. This is the critical part of the strategy. Find out where the price action is bouncing off of. This is the most painful part of the strategy. This is what's going to keep you looking at charts and going from chart to chart and drawing triangles and figuring out about where they break. Typically, if you draw the triangle, you can expect it to break within 4 or 5 bars of the end of the triangle. Unless it just fizzles out. It just dribbles out of the end of the triangle and doesn't really break in either direction. But that's a whole other story. That one's easy to judge. All you have to do is just watch it. Is it support or resistance? Is there an incoming trend? Look at the price action and determine what is happening. So the first thing you want to see when you're looking for a triangle is a trend into it. This graphic doesn't show it, but there should be a nice trend pushing up into this right here, okay? If you've got a nice trend into it and then you have this nice triangle, that increases the chances of this breaking to an upside. This is an ascending triangle. That increases the probability of it breaking to the upside dramatically. Then 5, 6, 8 bars from the end of the triangle, you can start watching for the upside. Now, I know a lot of traders that will wait for the pattern to get about this full and will take a long off the bottom right here with a stop loss below it. That's probably the least risky. I mean, it could continue to bounce in the triangle, but nice thing about that is that if you got in down here, you could take some profit up here, even if it bounces down, and then hold a little bit for the potential break at that point. However, our strategy looks more at the breakout. Another possibility. Okay, there are some possibilities. On the top, and the higher lows at the bottom creates the resistance here. It's the bounce.
Hey Tim, your sound is breaking up for us. Can you switch to a different mic, or can we maybe just mute and turn it back on and see if we can get a better connection?
Every time if it would meet all the strategy.
Ooh, I don't know what just happened, but you just went all Speedy Gonzales on us. All right, everybody, hang on 1 second. We're working on Tim's audio. Tim, if you're talking, we can't hear you, buddy. All right, it looks like you're back in and you look clean. Give me a mic test. Everybody, I'm gonna try to private message him because I don't think he understands that we can't hear him. Because I can't hear him. Can I? I don't think he. I'm gonna have him call me. Can y'all hear me? Can you hear Jeanette from Alabama? Oh, roll tide. All right. Y'all give us just a second. He seems to be going through his slides, so maybe he thinks that, let me mark the time. We're going to have to edit this out of the recording.
Test. Is this better now?
Yo, I hear you. All right. Can you hear me?
Is it still a bad connection?
No, this is very clean. I think you got to this slide. You were still talking, and we couldn't hear you. So maybe start on the slide. And I've put my phone number down in the chat box for you. So if you hear me cut in, you can try to work over the phone if we can't get it to clean up. But you sound good to me. So
okay, I have a sometimes wacky internet connection. And
yeah, it was
if it fails on me, I'll
try again, and it went like you sounded like you just like we hit the fast forward button, but we could still hear you. That was funny. Okay.
I host a trading room every morning, and periodically I've got to cycle my internet connection, which usually just takes a second. But I apologize for that.
No worries. You are more better now, so take it away.
Okay. Oh, that's great. Okay, so let me step back just a little bit for context.
Yeah, they're saying that you broke up right in the middle of this chart, where we kind of lost you.
Okay, great. So you can see there are 3 points here that define this this resistance area right here, and then 2 points that define the higher lows or the uptrend line. Okay, to create this ascending triangle. This is a great triangle and one that I would trade every time if it would meet all the rules of the strategy. This triangle is already formed, but what does it look like before it gets there? Okay, you see that it's got a great trend into it right here. Okay, so you can just start by drawing the lines as soon as you've got a couple of points up there to draw one. And then the lower part, of course, when you start getting ascending lines down here. So you draw the bottom line of this area to draw your triangle, and in this case it will be an ascending triangle. The reason I drew the upper line where I did is the price seemed to hit this area and bounced right off and went back into the triangle. So you see wicks represent price rejection. Anytime you see wicks, that's price rejection. You'll notice that there is a level here that price seems to be unable to close above, which gives us additional support for this being a strong resistance level right here, because a lot of wicks and then a level here where all the closes are below. Okay, and then when you see that kind of rejection right there, start drawing lines. I draw lots of lines. Don't hesitate to draw on your charts. You can always delete them if you decide that they're stupid. Okay, the symmetrical ascending and descending triangle patterns can all be used with this strategy. I just want you to know that they come in all different shapes and sizes. They're not always perfect. That doesn't make them more or less effective. You may ask, if these triangle patterns are based on emotions, people getting in greed, staying in greed, getting out because of fear, and so on. The reason the patterns are not always symmetrical and always exactly the same is because every time you do it, you have a totally different group of traders with different wants and desires and fears and emotions and so on and so forth. So that's the reason why patterns are never perfect. A line is never just a line, it's always a zone. That was one thing that was important to me when I finally got a hold of that concept, that most of the time the price will not bounce exactly on your line to the pip. Sometimes it'll fudge through a few pips, sometimes it won't. Sometimes it won't even reach it, and that's because this zone is created by traders putting orders on either side. The trader will put an order on the far side for a break of the zone or a break of the level, and they'll put orders on the near side for a bounce off the level or a reversal. So that creates a zone because every trader uses a different rule of thumb for that. I might use a 2-pip margin. Other traders might say 5 or 10 pips instead. So that creates a zone. So a line, always remember, a line is never just a line, it's always a zone. Okay, once you've identified the triangle, step 2 is to wait for the break. So, you know what? In trading, step 2 is always patience. Patience. I'm going to create patience by just boring you to tears for the next 5 minutes. No, not really. If it's on a daily time frame, it may be a week before you see this break. If it's an hourly time frame, it may not break until the next day. What's important is that it will break at some point or fizzle out the end of the, I always say that. There are always 3 directions a triangle can break. It can break to the upside, it can break to the downside, or it can just dribble out the end and not do anything. So it's just like the market. It's either going up or down or sideways. So if you go back in your charts and draw some of the triangles that you see, you can see that when the break occurs, more often than not, the break happens fast and it is usually powerful. Like this. This is an example of every time it reached, think about this in terms of traders and orders. Okay, the line was established here by these 2 levels. So now there are a whole bunch of traders that think, oh, when it hits this level, it's just going to bounce because it bounced violently here. So now traders have got orders at varying distances from this line, including probably this one. And they're saying this is going to bounce. So I've got sell limit orders right here, right up here near this line, in anticipation of this right here, in anticipation of these patterns right here. Price came up here, got lambasted with a bunch of sell orders and retreated, and it kept doing that, and it kept doing that, until finally the people who are putting sell limit orders in here are going, this has happened an awful lot, maybe it's not going to happen quite so much, so they're not quite as serious about pushing this price back down. And then it reaches this point and it pushes up, and then it's accelerated by everybody who had buy stop orders above the line here at varying distances. So now you've got a whole lot of buying activity, and wha-bam, it's up there now. Now it's reached a point where some of these people from down here are starting to take profit, so it retreats a little bit because taking profit from longs is selling. So selling activity drives the price down, and now it drives the price down all the way here. And it's not unusual to see a huge bar like this retraced 50%, 38 Fibonacci levels, or 50%. So now we got a knife fight here, which is what a consolidation is. A whole bunch of people that are thinking, well, I got my profit from down here and then it's pulled back, so I'm going to buy some more. So it goes up a little bit, and now it goes up enough that some of these people who are in up here are going, I thought I was going to lose that, and now it's, you know, price is going up and I can take a little profit, and drives price back down. And eventually traders, you know, get this out of their system and they start agreeing, and that's when price starts going back up again. So that's what a consolidation is, a knife fight, or a tug of war, as the early slide said. And that happens in triangle patterns, in consolidation patterns. It's just that a consolidation pattern like this is a little less predictable. It's hard to get an edge on this. Okay, but anyway, that's the reason why the breakout bars are huge like this most of the time. However, you remember, in the market there are always other factors that are affecting price. So news, for instance, or you know, some talking head is talking about why the price of their currency should not be so high, or whatever, or Brexit. Okay, once you see a breakout above the triangle, it will always be a buy. If it breaks out below the triangle, it will be a sell. If you are unsure if it broke above or below, don't trade it. And that's the example of, you know, it dribbled out the end. It dribbled out the end of the triangle, and I don't know if you would call that a break up or a break down or whatever. Remember, there's nothing that requires you to be in a trade at any minute. Just because you're not in a trade doesn't mean you have to find a trade immediately to get into it. You're way better off waiting, being patient, getting the proper setup before you start jumping into trades. Okay, so step 3, that brings us to step 3. After you've identified the breakout, you want to wait until price settles a little bit before you enter the trade. Once you see that it broke your triangle, you can technically go ahead and trade at that position. This method would be for more advanced traders who also consider the current price action and what the volatility of the market is. In thin or low liquidity markets, head fakes, break of the level, and then a retreat back to the triangle are common. So a lot of traders will just trade the break. They will buy right here above the triangle, but probably only in heavy markets, in busy markets. Low liquidity markets like, you know, the afternoon after London closes, particularly the later afternoon, New York time, 3, 4 o'clock, the market gets very slow, very low liquidity. Breakouts are less likely to happen then. Head fakes are more likely to happen then. And a head fake would just be, this would push way up here, and then before this candle closed, it'd be way back down here again. And then it would continue to follow the triangle. So what we want to see is a nice breakout and a close. This is the pound USD on a 1-hour chart, currency pair. So I bumped it down to the 15-minute to enter the trade. So the breakout happened on the 1-hour here, pushed up hard. What we want to do is look for a pullback. Now, like I say, this pushes up hard, then all these buyers, all the people who were buyers down here are looking up here to take profit. They're selling. So this is what happens. this kind of a pullback. So the time to make entry is when the pullback has ended. Some strategies I like staying in the current time frame, but this one in particular, I know that once this triangle is broken, there's a possibility of a huge move up or down, and the earlier you get in, the better. So sometimes people are religious to sticking to one time frame. Others will say, well, this is a huge move. I don't want to wait for this hourly bar to close. Let's look at a shorter time frame, say the 15-minute, and watch for closes and pullbacks on the 15-minute. Because on the 1-hour chart, that doesn't look nearly as enticing. Okay, and step 4 is the take profit and stop loss techniques. Okay, so this is the hourly version of that chart. You can see it's just not as appealing as an entry as much as this one right here. You see this is a really nice pullback to look for an entry on. But on the 1-hour chart, not as appealing. However, we entered it right there. Price pulled way on back. So what we'd look for is a break above this consolidation after we're entered. We watch it for a break above this consolidation, and then for it to make another consolidation, a stalling point right here. Once, you know, this price action is fairly predictable right here. It's pushing up. All of a sudden, bam, bounces hard off this wick. Now, you see this, it did the same thing right here, but it didn't bounce off that level again. It pushed on through it. In this case, it bounced off almost exactly that same level. So once you see that bounce, you say, this is stalling at this point. I'm out of here. I'm out. I'm taking my profit. I'm gone. Okay. And also, we set the stop loss a few pips below the breakout bar, the hourly breakout bar here. Because if price is back into the triangle and drops below that level, then we know this is just a head fake at that point. As you can see, that is what happened here, so we would exit this trade for an 89 pip winner. Stop loss placement. Place your stop loss anywhere between 30 and 60 pips from your entry. This can be adjusted depending on what time frame you are trading. From a 1-hour to daily time frame, 30 to 60 pip stop is ideal. Any smaller time frame, consider a 10 to 30 pip stop. Okay, let me talk about stop losses for a minute. When I was learning how to trade, a couple of the trainers that I work with, I'd say, okay, we're in this trade, where should my stop loss be? And they'd say, well, that depends on you, which was really helpful at the time, I understand now what they were saying, but that wasn't really I was asking the wrong question. The right question is, how do I place a stop loss that works for my strategy? Well, first of all, stop loss is not to protect the trade. The stop loss is to protect your account. Your account is the most important thing that you've got, and you can't lose it. You lose your account, and you have nothing to trade anymore. You're done as a trader, unless you have a huge bank account and you can just load up your account again. So the real question I was asking him is how do I pick a stop loss once I've determined what my personal risk is. You know, am I risking 1% of my account on this trade, 2%, 5%, 0.5%, whatever. But once I've determined that part, where's a logical place for my stop to be? Well, the logical place is to hide your stop behind some sort of support level. In the case of this bullish trade, in the case of this bullish trade, you want to hide your stop behind some type of a support level. The heavier the support level, the better. Well, anytime you have a broken triangle like this, especially one that's significantly broken with multiple closes and complete candles above it like this, this is now a level that traders are going to want to retest. They're going to want to pull back and touch that level again. And if you go back and look at heavy support levels or resistance levels that have been broken like this, you'll notice that often there's a bar like this one right here that comes back and retests it. Well, this one obviously didn't push all the way down. I can't really measure the pips too well here, but it looks like it might be 10 pips away or so. So that's probably not even touching the zone. Remember, a line is never just a line, it's always a zone. It's probably not touching the zone. But, you know, in the trader's mindset, you can say this is a pullback and a retest. So the most prominent support level, I would think, here would be not only below this bar, but remember I mentioned all these candles that didn't close above this level? I would set my stop loss below that level right there. Okay, so that's your stop loss. When we say a 30 to 60 pip stop loss, take that sort of thing into account. Get it below some type of a support level. You know, this candle right here is about the same level as this wick right here. Well, this was huge resistance, huge support right here at this point with this rejection of this wick right here. So that's a fairly hefty support level right there, I'd say. So if you wanted it even further down from here, go down here. Just make sure that it stays within your risk parameters that you have written out in your trading plan. You do have a trading plan, right? That's beyond the scope of this webinar. But yes, find out about trading plans and write one. Don't try to trade without one. And that should include how much you're willing to risk per trade. Okay, stop loss placement. We've already looked at all this stuff. Okay, so here are some examples of triangle patterns. This one's a little bit of a wacky triangle pattern, but if you have a triangle pattern, even if it doesn't follow the ascending, descending, symmetrical pattern, you can still look for trades on it. I just personally like them to be a little more orderly, a little more regular patterns. This one's a little bit skewed. And I think that you can find enough regular patterns that you don't have to take skewed patterns. And I'm not saying that the regular patterns work better. Often they don't. I shouldn't say that. I think that there is no particular edge to using regular patterns as opposed to irregular triangles. Okay. That's what I mean to say. I don't know. Am I OCD? I don't think so, but I could be. And maybe I just like my triangles to be a little more regular. So anyway, rule number one is to find the pattern. Rule number two is to wait for the break. Rule number two is the patience part of the exercise. There's the initial break. Rule number 3 is to wait for the price to settle or pull back a little bit, consolidate, whatever. And this may be a situation where you'd want to go to a shorter time frame to find a buy signal. And then set your stop loss at some point. I think we're using 30 to 60 here, but I'd probably push this a little lower and get it below here. Getting it into the triangle, or below the retest of the triangle, this is what I would call the retest. Again, it doesn't make it all the way to the triangle, but sometimes it doesn't. Just getting the stop loss into the triangle and below the current triangle trend line could be enough for a stop loss. That would probably give you the closest stop loss, but remember that price can always head fake through the line. And here's another thing you could do if you want to, is follow your stops. I like to get a little profit off at some point and then lock my trade in. So I would determine a point, for instance, on one strategy I use, I have a 10 pip lock in. So as soon as I get plus 10 pips, I take part of the trade off, I set my stop at break even. Then I allow the rest of it to hit the target, or I may follow stops. And if you use MetaTrader, they have a trailing stop feature. I don't recommend that. What I recommend is that you manually move your stops up below the most recent support level. So as this price moves up, when it does this little break right here, I would move my stop to right below this level. When it breaks higher a little bit more, I might move my stop up to here, and so on. That's the way I like to trail stops. Every time you move your stop up, you're locking in profit. So like I say, when it pushes up, I like to get a little bit of profit at some target area, which may be again, I say look left on your chart to find areas of resistance. But then I like to leave what we call a runner sometimes, and then put the trailing stop behind it. Okay, here's an example of a 1-minute Euro USD triangle. I like this one a little bit better, particularly if it has a trend into it. I always look for the trend into the triangle. That's important. But triangle is defined by 4 points. 1, 2, 3, 4. Here's the breakout to the downside. So after you form the pattern, you wait, in this case, about, 8 minutes or so. And right here, price has paused after the breakout. I believe I'd consider this a pause too. On a 1-minute chart, you have a lot less time to think about these things. This trade would have nailed a quick 12 pips in a few minutes. Remember, this is a 1-minute chart. This goes to show you that strategy even works on a minute chart. Now, I've showed you mostly forex. I'm a forex trader, okay? So these things work on all sorts of instruments: stocks, bonds, futures, whatever, commodities. because triangle patterns are based on strategy. Based on psychology, not some magical movement of indicators. It's based on trader psychology. It's based on fear and greed, emotions. So that's the reason why patterns like triangles work. Okay, money management strategy for the advanced sniper trading strategy. Try to find big wins with small losses with few losses. Okay, some of this stuff is going to be what I call Captain Obvious, but it's not always obvious to everyone, and that's the reason why I like to include it. You want to find big wins, small losses, few losses. What your trading should look like is big win, small win, small win, small loss, small win, small loss, big win, and so on. You should never have big losses. You can control that. Okay? You won't always have the big win because you're going to get what the market gives you. So a lot of your wins are going to be small wins, and they'll offset the small losses. The big wins are where you really make your money. It seems like most traders either have no money management at all or a terribly complex system. Traders are always looking for the holy grail indicator that's going to always give them the exact market direction and X number of pips every time, and they never plan for losses. Losses are part of your job. Get used to it. Just keep them small. Always plan your trades. Plan your trades with the loss in mind. What if this doesn't go the direction I expect it to? The key to is go to risk $1 to make $2 with a winning percentage of 50 or better. Yeah, that's very true. That is the key. It's not always the result, but that's what you keep looking for. So if you log your trades in detail, and I use my FX book, and I log my trades in detail, including screenshots before and after, then I can go back and I can see what's working and what isn't working, what pairs are working, what strategies are working, and then I can see exactly the level to which you can analyze it is amazing at my FX book. I recommend it. I hope it's okay for me to recommend these things. I'm just telling you what I do, guys. I don't make anything from my FX book. For this example, let's say we risk 1,000 to make 2,000. We make 10 trades and we win 50% of our trades, net profit of $5,000. I'm going to zoom through the rest of this because time is getting short and I would really like to be able to answer your questions. Okay, did we do it? Did we provide good value on the webinar training? I will open it for questions, and I'll do my best to answer those quickly. If you believe we did a good job, can we now have permission to share our special offer? Guys, remember I told you I'm not a salesman, I'm a trainer. So I'm going to present this to you so that you know what's available to you. A special offer, since you learned this extremely powerful strategy and know that it works, why not take it a step further? We did just that by automating this strategy with an indicator we call the ATB Sniper. It's available for MetaTrader 4 and 5, TradingView, and NinjaTrader 7 and 8. If you want to see more, here's the link, http://tradethirsty.com/Tim. I need a little help if you wouldn't mind dropping that in the chat for the folks.
I'll do that for you. I'll do it for you right now.
All right, thanks.
Can you see the questions?
I'm not familiar with the GoToWebinar platform.
Okay.
I haven't looked yet.
Okay. All right. Well, you keep going. I'm a hush.
Okay. Well, I'm almost done, and then I'm going to look for questions. So the reason we added the word sniper in the name is simply because this indicator indicator triggers trades at precision accuracy, just like a sniper would perform on the battlefield. We created this indicator because it delivers many signals on a daily basis. The indicator will not only help you keep track of every triangle pattern on your charts, it will do so 24 hours a day, 7 days a week. I don't know about you, but I know I don't have that much time to be analyzing the market, so it creates a ton of trades, but it is also really accurate, which is why we came up with the name Sniper. Take a look at the indicator in action, and I'll show you some unique features you will not find anywhere else in the market. This is a live look at the indicator. It simply draws you these exact triangle patterns that we just showed you in the strategy. So when you see a pattern, a break of a triangle, you know that odds are you are going to see price action surge up or down. And when it does, here's what it looks like with our indicator. There you go. Entry level right here, stop loss here, profit target there. Nothing else out there can compete with the ATB Sniper if you want to trade our advanced sniper trading strategy. This indicator makes trading the strategy effortless. Don't forget it's fully customizable, so if you like green or pink, we got it. Got you covered. You'll also see previous triangles that were built. Another feature it has is the detect triangle function. Click on the detect triangle function and it draws it. Comes with a dashboard, shows you what signals are available. This is pretty awesome, guys. Seriously, I told you I'm not a sales guy, but finding triangles is tedious. Manually, doing it manually is tedious. It's hard to do. So nothing quite like this indicator and dashboard combination. It's everything you need to start trading the strategy, and it'll pay for itself in a single trade. All of these things are very true. Like I say, I'm reading the slides to you, but you know, I have traded without trying to find these things manually. That is the reason why I would get this tool, because finding them is tedious, like I say. I have better things to do than stare at charts all day. Here's what you get: advanced sniper trading, money management strategy, multi-platform access, rapid help desk support, free lifetime updates. Plus the bonuses, special bonus dashboard, free lifetime updates, strategy vault access. Advanced sniper trading is for sale for only one more day before it closes. I'm reaching the point now where I really want to answer questions. Webinar attendees only bonus. If you signed up to watch the webinar, we have a special offer inside the members area. Okay. Let me answer a few questions here and see if I can find them here.
It's over on your panel. You just have to kind of scroll down on the main panel, and then you hit that little arrow, the box with the arrow pops them out, and then you can read them from there.
Okay. Let's see. Getting past the trade-off strategy. The trade-off contest challenge. Okay, what kind of candles are these? Ticks or minutes? The candles are everything from, well, typically I use minute candles. I don't use tick candles. But these strategies will form even on tick candles if you want to trade that fast. Let's see, stop loss placement is helpful. Entry is on the red. Well, the entry is on, for a long entry, the entry would be on the break of the last pullback candle. So That one chart that, wow, I found it first time. In this case, on the lower time frame, here, the pullback candles were red. The entry would be on this green candle on a break of the close of the or the open of the red, above the body of the red candle is what I'm trying to say. Okay. The trading platform, the indicator will work on MetaTrader 4, MetaTrader 5, TradingView, and NinjaTrader 7 and 8. Yes, they're training videos. Let's see, can we get access to a recording? I believe there's a recording of this session, is that right? Yes, I believe there is a recording.
Yes, we will offer the recording. It'll take a couple of days though.
Okay. Pratik, you asked about hedging. I do not hedge. I have considered using options for hedging, but I haven't. My trades usually unfold much more quickly than that. I'm typically done trading. I start New York session at 8 o'clock New York time, and I'm typically done trading by 10 or 11. Does it repaint? Let's see, does the dashboard tell you how long back the candle pattern was formed? It does not repaint as far as I understand, Shantanu. Not available for TradeStation yet. I'm not sure if that's in the works or not, but if you don't use Ninja, it's also available for TradingView and MT4, MT5. It will work great on indexes and futures because triangles form on those because they're based on emotions. They're not based on anything that the forex only kind of things. Do the alerts trigger only for MT4 charts that are open? Well, if you're using the dashboard, you don't have to have the charts that are open, but typically, yeah. On MT4, it will only trigger on the charts that are open. Pratik, yeah, that's actually my point. Using the tools, the ATB Sniper tool, will save you a lot of time zeroing in on triangles. I would say yes, it would work fine on a tick chart. Marius, I'm not familiar with AutoView. Roberto, yes, it works like a TradingView plugin. Thanks, Jerry. Kay, the reason we're only looking at currencies is because the examples are coming from an MT4 chart, but it will work with futures if you have TradingView or NinjaTrader.